What's up, guys? It's Cash Flow Cart. My bed is not folded up because Mia is asleep and I did not want to bug her. So we're going to have to deal with that. Today's Thursday, July 18th. I'm filming the August dividend portfolio review. August, November, February, and May are my smallest months, and I am projected to earn $109 in dividends in August. We're going to go through the portfolio today, but first, as always, we'll do a quick life update. Today I haven't been too busy. I sat by the pool a little bit. I did not have work today, so kind of nice. Enjoying my off day. I wanted to read something, and I revisited Rich Dad, Poor Dad. Just read probably the first 60 pages of it again. It's a pretty good book. I don't know if you guys have read it. It definitely has a lot of good lessons, and I think if you are in the younger crowd, it's definitely a great place to start. I read it for the first time when I was probably 15, and it definitely gets you thinking about wealth building. It doesn't directly touch on dividend stocks, I don't think, but kind of this wealth building game as a whole, it helps. So anyway, it was nice just getting some sun, reading that book. But that's enough yapping. Let's get into this portfolio, guys. The total value of the dividend portfolio is $61,550, as you can see right here. Yesterday, I was watching the markets for like 5 minutes, and I saw, the portfolio value did cross that $62,000 mark. And then this morning it was at like 62.2. So, it is exciting. That $60,000 mark was a goal of mine for a long time. And now it's like, I feel like we flew right through it and we're at 61 and change. So that's exciting. Again, as a dividend growth investor, I'm not always going to get caught up in like my portfolio value as a whole. I am more interested in, kind of my dividend income and how it can increase year after year. But I would say this, and this is kind of how I view, the investment total. I would say like capital appreciation or unrealized gains in your portfolio is going to come from a byproduct of how well you're taking advantage of undervalued stocks, how well you're building out positions and locking in, attractive opportunities. We will go over today actually a great example of a stock I was able to take advantage of, and like just in the past weeks, I've started to see, the unrealized gains kind of skyrocket, I guess. But we will get there when we get there, guys. Real briefly, the monthly average in this portfolio is $209. That comes to an estimated annual income of $2,510 every year. And yeah, like I said, August, November, February, May are my lowest months at 109. And then September, December, March, and June are projected at 217. And then my best months being October, January, April, and then July, projected at 301.54. That's definitely exciting. I would definitely like to get to a point where, I look at 300 as like a slow dividend month. But we will get there, and we will document it on the channel. Let's get into the holdings. So we're going to go ahead and sort by market value. I think last video for July, Altria may have been the number one. Right now we have Realty Income at the number one position in the portfolio. That market value comes in at $12,411.95. And it pays me an estimated $679 over the next 12 months. Again, that's a monthly payer. So that breaks down to, paychecks of $57 per month. It hits on typically the 15th of the month if that is a trading day. I like that consistency, and a $56 check in the account is definitely definitely not nothing. That one I'm happy with the size of it, and I'm not probably going to revisit buying this one for a while. I will say I am down on that position. It's probably been, I guess, my most poorly timed investment. But, I want to be transparent here. You guys can see here my average price on these 215 shares is $65 and change. Realty income trading at $57.73. Although, hopefully it does look like it's reversing soon. We saw this downtrend. Lately, it's kind of maybe pushed through that trend line. So we'll have to wait and see. Regardless, I'm probably not going to continue building this one just because of the capital I have invested in it. I feel like I've hit kind of my ceiling in terms of how many dollars I want to throw at this one. So, we're sitting on a little bit of an unrealized loss on it right now, but I'm not worried about it as a long-term investor. Let's move on. The next one is going to be probably a great example of what I was speaking on investment total earlier. The next stock is Altria Group, ticker symbol MO, the tobacco giant. That market value for me is $12,332 and change. And my estimated income from this guy over the next 12 months is $980. I like that a lot. However, I will remind you that at some point, we have to be careful. People talk about diversification all the time, but as a dividend investor, we have to be careful. Where is our diversification in terms of where our income's coming from? Okay, so technically, my dividend income from Altria makes up 39% of my total dividend income in the portfolio. And for that reason, I'm kind of in the same boat. I don't want to continue building Altria out. Rather, I'm enjoying the position. Real fast, let's look at the Altria chart. I think it's relevant because I feel I've been using Altria for a lot of teaching points lately, and I don't want you guys to misinterpret that as buy Altria right now. I do want to go over the chart, okay? So I've spoke on this one before in quite some detail, but this has been a long-term stock that I've been building out for many years, okay? Probably focusing on Altria, it's the stock that has taken me the longest time ever to build out a position in. You guys can see back as far as 5-6 years ago, I was buying shares of this one, and my cost basis on it I've locked in is $44.56. Now Altria is trading at $49.33. I'm hoping it can break that $50 mark in the next, couple weekly candles. I think that $50 even number will be kind of a psychological barrier for a lot of investors on this one. And, hopefully it will confirm kind of the start of an uptrend. That's kind of what I anticipate happening. I know this is going to be a slower mover, but I guess what I'm getting at here is this one took a lot of years to build out, and now I am seeing, I am finally seeing the unrealized gains on it. I am up $1,190 on my 250 share position in Altria, and that one's probably going to stay there for a while. Next up, guys, we got Apple. So Apple's at my number 3. It was, and it would still be actually at the number 1 spot. But you guys know I in the past month I have taken Apple down from 63 shares down to 50, and I went ahead and reallocated those funds into Hershey, as well as taking 5 shares off Microsoft into Hershey. So Apple's the number 3 now. The market value is $11,209, and that pays me an estimated income in the next 12 months of $50 even, guys. Apple, I mean, there's not too much to say on this one other than I'm enjoying the position, but I'm not necessarily interested in pulling the trigger anytime soon. I've spoke on with Apple and Microsoft both. I feel the tech sector as a whole has gotten very overvalued. We've seen it in Apple, Microsoft, I assume Nvidia, but seeing this share price so overextended from the 200-week moving average, I'm definitely not looking to add any Apple shares. Rather, I'm just going to kind of keep the position in the portfolio, enjoy the dividends, and I guess be a fan. My average price on this one is $145, and that puts me at an open profit on it of just shy of $4,000. That number was even bigger, before I took the 13 shares off. My average price did go ahead and get adjusted from 117 to 145, which hurt emotionally a little bit, but I'm happy with that move, but we'll keep an eye on Apple. Let's move on. Next up, we got Microsoft. Like I said, I'm kind of in a similar headspace with Apple and Microsoft, being that they've traded, from a technical standpoint, they've traded very similar, at least in the past 5 years. The market value of Microsoft in my portfolio is $6,605 and change, and that pays me an estimated annual income of $45. So it's been good real time for you guys to see that kind of, okay, I am a dividend investor. Apple and Microsoft are not paying a very big chunk of my estimated annual income. However, there has been very practical uses for these positions, and it's been capital gains, some trimming when I when I see these companies hitting all-time highs, and I've been able to reallocate those funds into the other guys. So I don't want you guys to get in this headspace of like, okay, I'm a dividend investor, I have to stay with stocks yielding 5, 6, 7%. I don't want to go for more of the stereotypical growth names. Guys, try to focus on analyzing each company through its own lens and try to focus on picking up, attractive opportunities, and it will work out. Not to mention, I do foresee both Apple and Microsoft continuing to raise their dividend in the future, kind of as they make that shift from the growth name to the value name. And I think it's already kind of started. But moving on, next up we got Pfizer at $6,596 market value. Guys, that pays me an estimated income of $373, guys. Obviously, all these are quarterly payers, I should mention. The only monthly is Realty Income. But you guys probably knew that. So Pfizer, kind of a similar boat with Pfizer that I was in when I just touched on Altria. So it took me a while to build out the position. There was definitely, a good amount of pain, I guess, with this one. Wow, I haven't even looked at this chart. Hang on. Oh, I'm on the wrong stock. Bear with me, guys. Where was I? Okay, so similar boat as Altria. It took me quite some time to build out this position. I've built the position to 222 shares at an average price of $33 and change. Pfizer is trading at $29 and change. So I do have, an unrealized loss sitting in this one. However, I am proud of this position being built out. I've locked in roughly a 6% yield on cost in this one. And at least from a technical standpoint, I do see Pfizer finally bottoming and hopefully confirming a reversal here shortly. This kind of goes back to market timing. You're never going to be able to lock in immediately, a perfect cost basis, guys. And also, you're probably not even going to have the capital to do so. So a lot of these names I'm trying to average through and just try to lock in, the best cost basis I can. And I think Pfizer has been a really solid example of that. Hopefully, if we revisit this one, if we revisit this chart in 2025 or within the next 3 to 6 months, hopefully it will be able to be, a better teaching example, and we'll be able to really see, okay, averaging down, continuing to build the position in consolidation, and then hopefully now we have the position built out, we can see some capital gains. Does that make sense? And I don't know, I'm excited. We'll keep you guys updated. Again, I don't have a crystal ball, but these are just kind of my biases, I guess, I foresee happening. Moving on, guys. Hershey, the brand new position, the sweet dividend. Market value on Hershey is $5,800, and that pays me $164.40. Let's check out how the position's doing. Okay, my average price on it is $182 and change, and that's on 30 shares. That gives me an unrealized gain on Hershey of $319. So, I'm not going to bore you with a whole nother analysis on Hershey. I've got videos you guys can check out about that. But I've recently added this one in this consolidation. I was kind of looking for the 170 mark initially when it first broke down. But when I saw it was going to consolidate, I went ahead and pulled the trigger. I locked in, the 30 shares at 182. And now it's trading at 193. We'll have to see how long Hershey hangs out at these levels. I'm not opposed to continuing to build this one, but I'm also not opposed to having it be kind of a medium position that I built out, locked in, a good average price on, and then I just let it sit in the portfolio and I let those dividends continue to roll in. We'll see. Again, this is a dynamic game, all right? We're going to have to see what the market gives us. But next up on the list, guys, coming in at position number 7 is Starbucks, ticker SBUX. That one's at $5,193.30, and it pays me an estimated annual income of $160. And to be quite honest, I probably have not done enough due diligence on Starbucks. I have picked up a few more shares opportunistically as it's pulled back recently, and I may continue to do that, but I'm not going to say I'm going to for sure add to it, because before I get too bold on this one, I definitely want to go through the numbers again in depth, off camera, do some more due diligence on my own. But I like Starbucks, and it's kind of a medium-sized guy in the portfolio, I guess. And then lastly, the smallest, I guess the only small position for this portfolio value is T. Rowe Price, ticker TROW, sitting just shy of $1,400 and paying me just shy of $60 a month. With that one, I'm kind of in the same boat. I was really excited about starting the position. I have an average price of $105. I was hoping to build it out under that $100 mark, but it's still kind of in that consolidation, and I haven't really been in like a tremendous rush. I don't know why I just said tremendous, but I haven't really been in some huge rush to build this one out. I definitely would not be opposed to picking up more shares as long as it stays near $100 a share. But, otherwise we'll have to wait and see on this one, and it may just stay kind of the bottom of the barrel right now, guys. I will keep you updated on the channel. Okay, guys, I'm Cashflow Cart. That was the August update. Thank you for joining me today. I really enjoy, doing these more laid back portfolio overview videos just once a month. Because there's not a lot of planning. It feels like it's more conversational and kind of raw. And I definitely really enjoy these videos. I hope you guys do too. And I drop new content every Monday at 6 p.m. If you're not subscribed, feel free to hit that subscribe button. If you want to hit the notification bell, feel free to do that too, guys. I will catch you in the next one. Let's build wealth.